let's go over some loan mod facts and tips, things that you should know about as you're going through this loan modification process or starting it, or you're trying to end the loan modification by closing it up, hopefully getting a favorable result. The first thing you should know is you should really know if you are even a candidate for a loan modification by understanding the criteria. Lenders are, what they're doing is they're dropping your mortgage payments so that they are 31% of your income, of your gross income. So let's say, for example, you're making $10,000 a month. If you're making $10,000 a month and you have a payment right now of $3,000 a month, you're not going to qualify for a loan mod because you're already reaching that 30%, and it's not even 31% of your debt of your income that your mortgage, principal, and interest, tax, and insurance payment is. So you can make too much money, and then again you can make not enough money. So for example, if you're making $2,000 a month and you have a mortgage payment, amount of $600,000. There's no way they're going to be able to drop that interest rate and extend that mortgage low enough in order for you to qualify for that. Now, how do they do that? What lenders are doing basically is they're dropping an interest rate down to 2%, okay, up to 2% until they get your payment of PITI at 31%. If dropping your interest rate down to 2% at a 30-year payment still doesn't give you a 31% debt ratio, then what they're going to do is they're going to extend the 30-year loan into a 40-year loan. If they still can't do that, then chances are you're not going to qualify for a loan modification because lenders are using gross income and they're using that 31% figure for the government and HAMP programs. Now, it doesn't necessarily mean that if you are at 33, 34, 35%, you're not going to qualify, because in certain situations, even though you may not qualify for a government program, the lenders many times have their own loan modification in-house programs, as you may call it, and you may qualify for one of those. But I think more than anything else is that the loan modification has to make sense for them as well as you, obviously. But you have to show some type of income that will sustain a payment. And just remember that approximately 10% of candidates who apply for a loan modification actually get a loan modification. And I know that's a tough pill to swallow in terms of those figures, but that's just what's going on right now. Lenders are just not helping people like they promised and are receiving all of our billions of dollars to do so. They're just not doing it. Another point and factor tip that I would give you is don't take things personal. Don't be impatient. Don't get upset, and just focus on the goal. A lot of times you're talking to these people and they're rude. They lose things, they forget things, and they act like they don't know what they're doing because in many cases they don't know what they're doing. Okay, don't take it personal. They're probably just as tired of dealing with this housing crisis as you are. Don't be impatient. It could last a year. It could last 3 months. It could last 45 days before you get that loan mod. Just stay on top of your game. Just make sure that you're giving them the documentation that they need and you're following up with them on a regular basis, and just focus on the goal. Here's one that I really like, and that's keep your financial documents handy and continue to save updated stubs and statements. Every month that you get paid, every month that you get a bank statements, if you get paid every week or two, or whatever the case is, keep it in one of those big envelopes that you put all your tax information in. Why? Because even if you submit your loan application today, if it takes 3, 4, 5 months before they make a decision, many times they're going to contact you and call you to see if you have an updated stub or updated bank statement. You have to have that information with you. If you have all that stuff handy in one place, you'll be able to provide it ASAP. So definitely keep all your stuff handy and in front of you all the time. Always make copies of everything that you send in case that you have to review it with the lender. Don't send them originals. And what I would do too is if you put your cell phone number on that application, which I would do personally if I was you, I would do that. But if you do that, they can call you at any time of the day. And if you're at work and you don't have your information with you, it's going to be tough. So you give them your cell phone number and you take a package or a copy of your application with you and your most current paycheck stub. So that way, whenever they call you, you're always within seconds of being able to give them a response for whatever that they need. So be prepared, okay? Be prepared. They don't always work on your schedule. They usually work on their own schedule. And a couple things you should know about too in terms of income is if you can't document the income, more than likely you're not going to be able to use it. So if you say that you have a part-time job, but you're not showing proof that you have a part-time job by depositing that money in the bank, guess what? You're not going to be able to use it. If you're telling the lender that you're renting a couple of rooms out for $400 or $500 each, but you're not showing deposits, you don't have a rental agreement, you're not going to be able to use it. Okay, so make sure that every dollar of income that you're telling the lender you're making, that you're able to document it. And I would call about every 3 to 4 weeks, more or less, to the lender to get an update and find out what's going on with your transaction. Calling once a week is way too much. Once a week, you don't need to do that. Every 3 or 4 weeks, I think is just fine. And document all conversations. We have this cool cool form on our website at robertaldana.com where you can download it, and it has like the date, the time, the name of the person, and you can enter the conversations that you've had and keep that with you in your folder so that every time you talk to somebody over there, you're able to document it, okay? And just remember to fill out the application in its entirety. Incomplete applications get what? They get tossed. So make sure that you do that, because lenders will only work on files that are complete. Reply immediately to lender requests for updated docs and follow-up. If they ask you for updated paycheck stubs, send them to them ASAP. Open every single letter that comes from your lender, even if it could be just a collection payment. You don't know that. It could very well be a document stating that they want a final paycheck stub before they make a decision. And if you're not opening your mail and you're not replying to them, your loan modification is going to get denied. And here's one that a lot of people really just, I think they're just missing the ball on. And they hear that if you miss your payments, you're going to get a loan modification. That's baloney. If you miss your payments, you're going to lose your house. If you miss your payments, are they going to pay more attention to you? Absolutely, they're going to pay more attention to you in many cases, but you're still going to have to qualify for the loan modification. So just missing payments is not like an automatic thing that you're going to get a loan modification, because 8 or more payments more or less can result in you losing your home in California. And I'm sure it's probably the same in pretty much all parts of the country. If I was you, I would watch my video, What is the Notice of Default? If you're about to miss payments or if you miss payment, it's on my website at robertaldana.com. It's a great 10-minute video. Goes over what your options are if you start missing payments on your property. And here's a few more loan mod facts and tips, and that is read my article, The Truth. There's some great stuff on my website at robertaldana.com, and I'm not saying it because I wrote it, but I'm just telling you, I've talked to thousands of people. I touch thousands of people on my radio shows and on my television shows for many years. I talk to a lot of people, and I like to report the stuff as I'm seeing it. Read The Truth if you can't. In the very least, listen to my 40-minute podcast, Loan Mod Facts or Fiction. If you don't have time to listen to my podcast at 40 minutes, you don't have time or the patience to do a loan modification, because these 40 minutes are going to be really instrumental in helping you understand the loan modification process. I promise you. So check it out at my website at robertaldana.com. Watch my videos at robertaldana.com. I also have videos at youtube.com/robertaldana. That is my YouTube channel. A lot of good information on there. I'm constantly putting people on there who we work with or helped, or people who are just going to give us some information and input on what's going on with the market. A lot of good stuff on there. robertaldana.com. Just click on videos, and there you go. A few more tips I want to give you. Put your loan number on every single document that you send to the lender. Every single document that you send to the lender, put your loan number on the top right-hand corner. You know those little address labels that you can get, or you put your address on there and you could put it on envelopes when you send people stuff? Well, what I would do is do about 5 or 10 sheets of 30, I think they're like 30 across or whatever it is. Do about 5 or 10 sheets of the smaller ones, and instead of putting your address on there, put your loan number. So that way when you send them a document, you paste your loan number on the top right-hand corner of that document. Because when they lose things at the lender's office, or they misplace things, or they find something, they're going to know who it belongs to if it has a loan number. Loan mods are not easy. Surprise, hello. They're almost impossible if it's a non-owner occupied property. So, the stuff that I'm talking about here today in terms of this particular series of loan modifications, doing your own loan mod, applies to owner occupied properties. I'm not going to tell you that you're not going to get a loan mod if it's a non-owner occupied property. I'm just telling you that it's much harder, much, much harder. So, just understand that and know that all this stuff still applies for the most part for non-owner occupied properties. It's still going to apply to that, but it's just going to be much tougher to get a loan modification with a non-owner occupied property. So this video, more than anything else, is focusing on owner occupied properties. Do not pay anyone for loan modification assistance. I used to have a company, a legal company. By the way, we were legal. We helped hundreds of homeowners get loan modification offers from their lenders, hundreds of them. In fact, what's crazy about that is I think about 76% of the people who stuck with us throughout the whole contract phases got some type of a loan modification offer, and that's a pretty high amount. And we can document it. It's on our website if you want to check out the list of people. I mean, we're not just making numbers up here, but we don't do that anymore. We're helping people for free. It's just kind of a public service that I do. I really enjoy doing it. Nothing makes me happier than to see a homeowner stay in their home. I think that's just the coolest thing in the world. I have enough real estate business. I'm busy. I'm not rich. No, I'm not saying that, but I just love helping people. To me, it's a really cool thing. Don't pay people for loan modification assistance. Many times it's nothing more than a scam. All these forensic loan audits and litigation offers by attorneys in many cases are just another scam. I, myself, Robert Aldana, was scammed by an attorney in Beverly Hills, California, who claimed to do forensic loan audits and litigations and all this baloney. All they did was steal people's money, and I think that's not cool. And hopefully these people get prosecuted at some point or another. But, I'm just telling you by experience, I've been there, okay, and I've seen it. And to me, most of these cases are nothing more than a scam. Not all attorneys are scam, no, just like not all agents are scams. There's great ones just like there's bad ones, but there's enough bad ones in there to kind of mess it up for everybody else. Don't sign a listing agreement in exchange, speaking about real estate agents, for loan modification assistance. This really bothers me. Real estate agents who are going out and saying, I'll tell you what, I'll help you do a loan modification if you sign a listing agreement with me. That's just not cool. And if you're a real estate agent watching this program, please don't do that. That is just not cool. You're not helping people. You're helping yourself. And don't ever give without, don't ever give with, always thinking of what you're going to get in return. Just give from your heart. If you're going to help somebody, help them. Don't help them and then just put a hook in there. That's just not cool. And if somebody's helping you, ask them for a list of people or track record of people that they've helped, because it's important that you work with people who have done this before and know what they're doing. Don't just start working with rookies when it comes to your property. That's not a good thing. If somebody's helping you, whether it's for free or not, ask them what they've done for others and ask them to show you a list, like the list that we can show you. It's crazy. People are out there pretending to be experts, and there's no experts. This is a constantly changing target and field that, you just need to work with people that know what they're doing. And really, more than anything, know and understand your rights, know what rights you have. If you accept the permanent loan modification, make sure it makes sense. Know your break-even point in certain situations. If you have a house that's worth $200,000 and you owe $500,000, it's going to take 15 years for you to break even. Does it make sense? Not if your lender doesn't want to work with you, but if your lender gives you a loan modification that has a payment lower than rent, heck, in a couple, 3 years, if you decide to move out, you can rent that property out and it'll pay itself off. So just know your break-even point, do the math, do the numbers, and make sure that it all works out for you. And just know that accepting a loan modification in certain situations can eliminate and really hurt some of your rights should you choose to sell your home later, because it could turn a non-recourse loan into a recourse loan. Talk to an attorney about that. They'll be able to help you more about that. And I guess more than anything is a short-term loan modification, a 2-year mod, a 6-month mod is a joke. It's not any assistance at all. All it is a Band-Aid for somebody who needs surgery, and it's going to do nothing more than put you in the same place in a couple, 3 years from now, and you're going to be starting all over. So, just know your rights, know how things work, and, you'll be a lot better off because of that.